Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how we're up a little over $1,800 in the past week of swing trading stocks. We're going to be talking about the strategy, the approach, our mindset with these positions. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading and how we find these stocks, our strategies, our approach, check out our school. It's fantastic. We offer private live streams, quizzes, lectures, a group chat. It's awesome. And we have an amazing sale going on for 51% off. You guys can use code 2025 to get 51% off. The code is only valid for one more day. So make sure you guys sign up, click that link, and don't forget to use that code. So guys, let's turn to the computer and see our more recent swing trade here. So the first thing that I want to talk about is going to be the broker. People always ask me what broker I use, and the broker I use is Moomoo. Now, the reason why I love Moomoo is because they offer great charting, paper trading. So if you're still in that learning phase, you guys can practice your entries, your exits, all that good stuff. And more importantly, it's actually a trading broker. This broker is designed for traders. It's not designed for long-term investors or anybody like that. This is designed for traders. So what that entails is it's going to have the best charting. It's going to have the best scanning. All these stocks here that we found today, we found with the Moomoo scanner. So make sure you guys sign up. You guys can get up to 20 free stock just by signing up. So let's click that link and jump into this. All right. So one of the things here that if you guys are just getting started with trading, I would highly recommend journaling your trades. Now, this is the journal I use here. It's right on Google Sheets, and I'll put a link to this down below. So if you guys want to get this, you guys can get it there. But why I love it is it breaks down your strategy, your trade performance, your approach here. So right now, this past week, we're up about $1,817. Our average time in trades right now is actually, it's about 6 days. I wanted to have all the stocks today on this month. And the reason I'm saying that is because our entry price obviously wasn't January 1st. They were December 30th. And I didn't want to put this in the December column when I'm going to be selling them in January. So I kind of changed the dates here, but it's not that big of a deal. All right. So with this here, one of the reasons I want to talk about this is because if we go to the dashboard, you can see what strategies, what approaches are working here in our overall win percentage, our total P&L. So looking at our weekly overview, this past week here, we have had great trades. Our entry prices on both of them are awesome, and yeah, so I wanted to show you guys this because this journaling your trades will really help figure out what's working in your strategy, what's not working, the stocks that you trade well with, the strategies you trade well with. So, I'll put a link to this down below. But now let's talk about our more recent swing trade here. All right, so we took two new trades, and the first one here is ticker symbol ENB. Now, I don't buy just random stocks, right? A lot of people think that, a trader just buys all these random stocks and all that stuff. No. What I do is I have a checklist that I go through, and I make sure each stock follows the checklist or is very close to it. Even, an A+ setup, it can still result in a loss. So obviously the checklist is more of a guideline, and it can adjust, a little bit here and there wherever I seem fit. So one of the things here, looking at this, we have all these lines, blue, yellow, the red, green. So up here on the chart, these are what we call moving average lines. So we have the 50, we have the 90, and then we have the 200. So the main difference between all of these is just going to be support strength. So the 200, so the red line, is going to be a harder support than the 90, but the 90 is going to be a harder support than the 50, right? In an ideal situation, you do want to, or at least me personally, I take a lot more trades on the 200 just because I've just had a lot better results with it. But with this stock here, the 90 does work just fine. So we also have this green line down here. This is what we call the RSI, stands for the Relative Strength Index. Now, looking at this here, you guys can see it was trading where the stock sold off. It was trading near around a 29, which last time I was trading for a 29 was back in this range. And what happened? We had great buying pressure. So what do we have? We have a stock on an upward trend, sold off down to the 90-day moving average line, which has acted as support in the past. It's undervalued on that RSI. We want to make sure we're not holding through in earnings, which we're not. And then the next thing I do is I go to a lower time frame. I wanted to see and see if we could get in on this breakout here. But by the time I actually saw it, I waited a little bit more for confirmation here. The absolute best entry price would have been right here because you could have entered here, kept our stop loss just below this lowest wick to ensure good risk and reward. But what we did here is we took a trade where the stock was above these moving average lines. When the stock's below them, where the stock's below these moving average lines, it's going to act as, resistance instead of support. So we waited for it to be above it. So now here what we did is we set our stop about here for a possible push up to about 44. Okay, that's a 6-to-1 risk and reward on that trade. So as we go to like a trading calculator, a trade return calculator, let's show you guys this. Imagine we are starting out with $100. We take, let's just say 52 trades a year. That's about one a week, risking 2% with a 6-to-1 risk and reward. And imagine, or out of 100 trades, you're profitable on 40%, on 40 of them. So now your total account has grown to $500 from a little $100. This is why good risk and reward, good risk, and understanding your win-loss percentage is so important. So breaking back to that trading, trade return, that trading journal, we're 100%. So if we keep that up, you can grow an account very, very quick. But realistically, you're not going to be 100%. All right. So this stock has been moving and grooving very well. Now our stop loss stock's actually almost near it. So we might just exit the trade a little bit below that line if it falls there. All right, the next one here is ticker symbol GNRC. GNRC is a stock we got in on. Looking at this here, we have that good and steady upward trend. It's heavy on that, that red line, which is that 200-day moving average line. It also has heavy support right here, as you guys can see, right on that trend. So hits it, buying pressure, buying pressure, buying pressure, buying pressure, buying pressure. Undervalued on the RSI. The hourly was forming this huge general downward trend. But where we got in on that support here on the hourly. You guys can see near and around the 152 mark. Hit it, buying pressure, hit it, buying pressure. So we got in right here. Stock broke out above it, formed a new trend, and now we're just keeping our stop loss just below that trend. It did break above that 200-day moving average line, which is a very, very, bullish thing for the stock to do. So now we're just continuing to hold and watch the stock creep up higher. But this is a simple strategy that you guys can use to start making money from swing trading, whether you have a full-time job, whether you are still in school, whatever it may be. The biggest thing though is to just continuing to learn and to practice and treat it like a job. Don't treat it like a side hustle or a get rich quick scheme. You're going to lose money. So guys, I hope you guys all enjoyed it. If you did, hit that like button, subscribe, and we'll see you guys in the next one. Take care.